Markets are buzzing with a mix of excitement and uncertainty as traders brace for a pivotal week in financial markets. The S&P 500 futures are climbing ahead of the highly anticipated inflation data release, while Oracle's stunning forecast has traders scrambling to position for the next AI-driven rally. But here's where it gets controversial. Is the market overreacting to Oracle's numbers? Or is this the start of a new era in cloud computing? Let's break it down. The scene at the New York Stock Exchange on Wednesday was a microcosm of this tension, with traders actively parsing every data point. S&P 500 futures edged up 0.2%, while Nasdaq 100 futures inched higher by 0.1%. The Dow Jones Industrial Average, however, dipped slightly, shedding 0.2% as investors balanced optimism with caution. But the real fireworks came from Oracle's stock, which soared 30% after the tech giant revealed that its multi-cloud database revenue from Amazon, Google, and Microsoft skyrocketed by an eye-popping 1,529% in the last quarter. This surge wasn't just about AI servers. It was a seismic shift in how corporations are adopting cloud infrastructure. We signed 4 multi-billion-dollar contracts with 3 different customers in Q1, Oracle CEO Safra Catz declared, calling it an astonishing quarter. Her words sent shockwaves through the market, and this is the part most people miss. Even though Oracle's latest earnings report fell short of expectations, investors were more captivated by the company's long-term cloud growth forecast. Could this be a sign that traditional tech giants are finally catching up to the AI revolution? Or is the market getting ahead of itself? Nvidia and AMD also saw gains in pre-market trading as the AI trade regained momentum. But the real test for traders comes this week with the release of the Producer Price Index, PPI, and the more closely watched Consumer Price Index, CPI. These reports will provide critical clues about the state of U.S. inflation. Economists predict a 0.3% monthly increase across the board, which would push the annual headline CPI to 2.9% and keep the core rate steady at 3.1%. If these numbers hold, the Federal Reserve could deliver another rate cut at its September meeting. But what if the data surprises on the upside? Would that derail the Fed's plan? Or is this the calm before a larger storm? Art Hogan, chief market strategist at B. Riley Wealth Management, offered a measured perspective. The inflation news over the next couple of days would have to be remarkably hotter than anticipated to change the narrative that we're getting a rate cut in September. Yet, isn't it possible that the Fed is underestimating the stickiness of inflation? We'd love to hear your thoughts in the comments. Do you think the Fed is too confident, or is the market's optimism justified? Meanwhile, the major indexes closed at record highs on Tuesday. The S&P 500 gained 0.27%, the Nasdaq Composite climbed 0.37%, and the Dow Jones Industrial Average rose 0.43%, driven by a surge in United Health shares. But the week isn't just about Oracle. Other big-name stocks like Chewy, Kroger, and Adobe are set to report earnings, adding another layer of volatility to the mix. And in after-hours trading, GameStop's 4% jump on strong Q2 results and Synopsys' 13% plunge on disappointing results remind us that no stock is immune to market whims. So, what does this all mean for investors? The coming days will test whether the current rally is a sustainable trend or a flash in the pan. As Oracle's 30% surge reminds us, the cloud and AI sectors are rewriting the rules of the game. But here's the million-dollar question. Are we witnessing the next tech boom, or is this just a temporary hype cycle? Share your perspective below. Do you agree that Oracle's performance signals a new chapter in cloud computing, or is the market being too optimistic? The floor is yours.